It's your boy Crypto Blood, and welcome to another episode of My 2 Cents. This morning we're looking at global economic collapse just may have been delayed, people. I'm going to tell you exactly why. I know it's doom and gloom every other day, but I'm telling you, this may have just delayed things another few months, maybe another year. Who knows? Who knows? But we've got the China trade deal with the U.S. It looks like they've signed a partial deal. So we're going to take a look at that and look at how this may affect the economy in a positive manner, or at least delay the inevitable. And then also we've got the UK elections. Boris ended up winning, Boris Johnson. And it's funny, that whole election thing over there in the UK mirrors in many cases what happened in 2016 here in the United States. The Conservative Party over there won, and you've got left-wing columnists, news article outlets talking about and giving people advice on how to leave the UK simply because Boris Johnson won. It's just insane. So we're going to take a look at that as well. And really, it kind of shows, in my opinion, it may be a foreshadowing of what's going to happen in 2020. Conservatives are taking over. This leftist ideology it's not working in today's society. So take a look at both of these, why this may have just relieved the pressure from the economy. But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. And I guess we can start with the UK vote. That's right, a new era for stock markets that lost over 100 billion. Conservative Party victory reduces political risk. In Europe, it says earnings and macro growth concerns continue to weigh on appetite, but at least that is out the way. And maybe now you can have a soft Brexit instead of a hard Brexit. And with this victory by Boris Johnson, many are thinking that a hard Brexit is now off the table. Something that is less harsh can come to pass. Says Boris Johnson's decisive victory may prove to be a turning point, not just for the UK, but for the entire scorned European stock market. The Conservative Party's win filled investors with optimism that a major political risk related to Brexit will soon be removed, sending the European equity benchmark near a record high. Goldman Sachs Group lifted its forecasts for both European and UK indexes following the election results. Fears the UK might crash out of the European Union without a deal have been a significant driver of over $100 billion in outflows from European stock funds this year, the largest among major regions. And now with the U.S. trade-China deal providing additional risk on fuel, now could be a transformative moment for European equities, says the likes of Colombo Wealth and Bank of America Mellon Corp. It goes on to say, although European equities have rallied more than 20% this year, many fund managers recoiled from a market plagued by political and economic risk. However, in mid-October, the mood started to shift and outflows turned into tepid inflows after Johnson gained parliamentary support for the principles of his deal with the EU. And look at this, European stocks trade at near record low discount to the US stocks. That is crazy. Look at that ratio. It's just been heading lower really ever since, I would say 2007. That was a peak. 2007 was a peak, and it's just been heading lower ever since. So we see a slight uptick at the bottom there. Maybe that will change the course, but we would need to see ratios come back above 0.6 for me to say that we've seen a turnaround in European equities. But not all agree. One analyst said that taking away a negative is not the same as creating a positive. That's very true. Europe still faces an environment of weak growth and low inflation, and there's considerably uncertainty about the UK-EU trading relationship looks like post-Brexit. And there's considerable uncertainty about what the UK-EU trading relationship looks like post-Brexit. So, I mean, this is true. How do you feel? I think that, just because this is out of the way doesn't fix the growth. That's very true. The growth over there is still tepid. The negative interest rates are still an issue. We can't ignore that. That is still an issue. So, maybe it's not necessarily the pill to remedy the sickness in the EU. I don't know. You guys let me know your thoughts about that. But it's just funny to see how some are reacting to this win by Boris Johnson. Left-wing newspapers advise people on how to leave the United Kingdom after election loss. Sound familiar? I think it sounds very familiar. If you're in the United States, you know exactly how familiar this sounds. Left-wing newspaper The Independent published an article advising people to panic about last night's election results on how to leave the UK. Boris Johnson's Conservative Party swept to victory over Labour, who ran on a hard left manifesto under their leader Jeremy Corbyn, and had their worst results since 1935. That is correct, almost 100 years ago. Shortly after the results of an exit poll were made public showing the conservatives would win with a large majority, some leftists on Twitter began threatening to leave the country. Go ahead and leave. Just like you liberals over here in the United States when Trump won, I don't see any of you leaving. You never left. You're still here. The world didn't end. It actually got a little bit better, says the Independent article. Also asserted that some people of color were considering leaving the UK if the Tories retained power as a result of the PM's history of racist comments. Oh my God. They try to pit that racism, that race card. They try to do that every time, people. Same old narrative, I tell you. Also, looks like we did get a partial deal. I mean, Trump has been saying this for about 2 years, and it's like the wolf crying help. You know, I mean, I just at some point stopped believing that there was actually a deal ever going to be put through, especially with kind of what Trump did in Hong Kong, which is, again, I think was the right thing to step up to the plate and get behind the Hong Kong protesters. I think that was an excellent idea to do that because what's going on there is definitely wrong. But looks like we may have a partial deal. USTR files notice suspending December 15th tariffs on Chinese goods. So again, this is another boost, I think, a piece of positive news for a drug addicted market. So they're going to eat this up. They are going to eat this up. The U.S. Trade Representative's Office on Friday filed a Federal Register notice suspending the 15% U.S. tariffs slated to go into effect on Sunday on Chinese goods worth about $160 billion after reaching a Phase 1 trade deal with Beijing. So it looks like this notice said that the tariffs were suspended indefinitely. The move provides formal notice of the decision on Friday not to proceed with the tariff. So that 15%, you know, I see what Trump is trying to do, use these tariffs as a threat, right? But we all know that really tariffs hurt us. You know, that 15% eventually would just trickle down and get passed on to the consumer, to the end user. And we would probably see like a 10% increase in the cost of many of the goods that we bring in from China. So glad to see that was abated, and we'll have to see what happens from here. But the main article is also out of Bloomberg, and it just talks about this whole, you know, world economy being saved by these two events that I just kind of went over. But this article kind of summarizes it all. It says two of the biggest hurdles constraining the world economy have just been cleared. They said, dodged by trade tensions for most of 2019 and political risks that hammered business confidence, the outlook for global growth will enter 2020 on a firmer footing after the U.S. and China struck a partial trade deal and outlook for Brexit cleared somewhat. The trade deal with China and the UK elections result have taken out a major tail risk overhanging markets and companies, said Ben Emmons, who is the managing director for global macro strategy at Medley Global Advisors in New York. The business confidence should see a large boost that could see a restart of global investment, inventory rebuild, and a resurgence of global trade volume. Like financial markets, most economists had factored in some kind of Phase 1 trade agreement between the world's largest economies when projecting the world economy would stabilize in 2020 after a recession scare earlier this year. But at a minimum, the agreement between President Trump and President Xi means some of the more dire scenarios being contemplated just a few months ago appear less likely. Bloomberg economists estimated in June that the cost of U.S.-China trade war could reach $1.2 trillion by 2021, with the impact spreading across Asia's supply chain. That estimate was based on 25% tariffs of all U.S.-China trade and a 10% drop in stock markets. So it looks like maybe this Phase 1 deal has, you know, paused some things, but as the other article talked about, I'm still not convinced about EU, even though we have a Brexit, you know, clear path since the Conservative Party won in the UK. I still feel like Europe is in a very bad situation. Negative interest rates. Now they're talking about trying to get out of that. If you try to get out of a negative interest rate environment because the banks are, you know, not doing great, you may help the banks out. But while you're helping the banks out, you're putting more pressure on borrowing and the economy as a whole. So it's like throwing the baby out with the bathwater. I mean, I don't see this really fixing anything, to be honest with you. Now, the China trade deal, yeah, it may help, but it also doesn't help that we see the Federal Reserve in the repo market printing more and more money on a weekly basis. So they're throwing everything at this, people, and they're, as I've told you, I think we're going to see a melt up I think you're going to see extraordinary measures by the end of this month into the new year from the Federal Reserve to continue to try to prop this thing up and melt this stock market up even higher. But again, we're toward the end of this thing, so just prepare yourself in the right ways. Again, you can't pick tops, you can't pick bottoms. Of course, there has to be someone at the top that picks it and someone at the bottom that picks it. But generally speaking, you look at a curve, 95% of the people never get the bottoms or tops. So why even try to do that? Have your strategy together financially and start preparing now. As for Brexit, the sweeping election victory by Prime Minister Boris Johnson, Conservative Party, means Britain is set to leave the EU on January 31st. Bloomberg Economics says the results put a growth rebound in play, which, coupled with looser fiscal policy, means activity should accelerate over 2019. At the same time, Johnson must now negotiate a new trade deal with the EU by the end of next year, meaning fresh uncertainty could emerge. Brexit could continue to weigh on economic activity as the difficult task of forging the UK's new trading relations is just the beginning. And as I read all of this, it just kind of makes me think about where does Bitcoin play into this whole mess? We're not seeing it react really to any of this stuff right now. I knew personally that there was no correlation, negative or positive, with Bitcoin in the economy and traditional markets. So I'm not surprised, but I'm just wondering when that correlation will occur. I personally think it will be a negative correlation. I think as equity markets around the globe start to pull back, you'll start to see a negative correlation with Bitcoin and begin to see it be somewhat of a safe haven. Even if we get $1 trillion into this market, it will make Bitcoin go to the moon. And $1 trillion is nothing. You see what the Fed is doing and injecting into the repo market every month. So $1 trillion is literally nothing, people. And that can make a world of a difference for Bitcoin. That's why I'm banking on Bitcoin over gold. And that's how I'm playing it. So we'll see what happens here. That's my 2 cents on this topic. Let me know your thoughts on the global economic collapse being put on pause because of these latest events, U.S.-China trade deal and the U.K. elections. Looks like the Conservative Party has won, and we're going to have left-wing people leaving the country like they threatened to do here in the United States in 2016. But they're still here, wreaking havoc. It's your boy Crypto Blood. Make sure you guys like, share, and subscribe, and click that bell to receive more news like this. I'm out here, people. Ha!